Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, mortgage resets were supposed to be a problem. Turns out, not so much. And the future of autos in Canada. Will it look anything like the past? Plus, growing our economy one employee at a time. That's all ahead. First, for the week that was in business, it's time for the briefs. Insolvencies in Canada remain near record high levels, according to the Office of the Superintendent of Bankruptcy. Consumer filings rose 2.3% in 2025, second busiest since tracking began in 1987. Business insolvencies did drop in 25 from the year prior, but they remain well above pre-pandemic averages. A read on jobs in the U.S. this week showed that U.S. employers added 130,000 jobs in January, and the unemployment rate fell to 4.3%. But those positive data points were offset by downward revisions to the job numbers in 2025 and 2024. The report showed there were 7.5 million unemployed workers in the U.S. for the 6.5 million job openings in December. Even as it loaned Canada Post $1 billion this week, the federal government said its support is not a long-term solution for the Crown Corporation. The new loan is in addition to a $1 billion loan last January. Canada Post is struggling under mounting debt and falling revenue as it seeks to stave off mounting losses. Canadian Airlines canceled flights to Cuba after the Caribbean nation warned it could run out of jet fuel. A U.S. oil blockade limits its new supply. Air Canada, WestJet, and Air Transat have all said they will ferry passengers home already in Cuba, but suspended all other inbound flights. The cancellations affect more than 100,000 tickets in February alone. Customers of a digital wallet system operated by Edmonton's Everyday Payments say they're missing money. Customers in 4 provinces have reportedly raised alarms about missing tips linked to the payment platform. It's operated by Toronto-based XTM Inc. The service is designed to allow for real-time payments to staff. A diplomatic spat erupted this week after U.S. President Trump claimed the newly built Gordie Howe International Bridge between Windsor and Detroit is somehow mistreating the U.S. The bridge was jointly constructed but funded by Canada, which will recoup its costs in tolls over time. The president's demand that the U.S. own half the bridge is easily met because it already does. And those are your business briefs. With rates higher, about half the mortgages in Canada reset last year or will reset this year. But far from the tidal wave of delinquency that was feared, it turns out homeowners are pretty resilient. Tanya Barasa-Ochoa is Deputy Chief Economist at CMHC. Thanks for being with us.
Thank you for having me.
So we were worried about what would happen. We are seeing little pockets of concern, but for the most part, would you say that it's been a pretty stable response to the resets?
Absolutely. I mean, when we were facing this massive renewal wave a few years back and looking at the big gap in interest rates that homeowners were going to have to face, I think there was reason to worry a little bit more than what we're actually seeing right now. And basically, borrowers are showing, as you mentioned, to be more resilient. They're adjusting in many ways, adjusting their budgets. They're also making adjustments at renewal as well. And so we're seeing a lot of these consumers choosing longer amortization periods, which is reducing their monthly mortgage payments. And so that has helped significantly. And I would add the mortgage regulation that is in place has also helped safeguard basically that increase in mortgage arrears.
Yeah, and this is an important point because the stability of the system is better, of course, when people don't have to walk away from their mortgages. But it may not be better financially for those people if they take a longer duration on the mortgage, if they actually are putting down less capital, they actually own less of the home potentially at the end of it. Is it a trade-off worth making, though?
Absolutely. I mean, we have seen the majority of consumers opting for that longer amortization period. It is a trade-off, as you're saying, and it comes with a cost. So this short-term affordability in some way is helping many to navigate this financial pressure, to make ends meet at the end of the month. And so it may be a good idea for some, but it's just important to note that it does come at a cost. These borrowers are paying a lot more interest rates, a lot more interest payments basically at the end, and are paying their mortgage for a longer period of time. So it's really this trade-off between short-term affordability and long-term wealth.
We did, of course. The reason why we saw such a huge increase in home prices was that period of time where rates were still very low. And because of pandemic, in an unforeseen way, people's savings went up, right? A lot of us had more money than we expected to in the pandemic. Unexpected. So we saw this crazy response in the housing market. Now, Tanya, it's probably the reverse, right? Rates are higher and likely to kind of stay stable, presumably. And people have now dealt with inflation and, different price pressures. What's the outlook for the housing market, given that things have kind of shifted almost 180?
So we're definitely seeing a lot of cooling, I would say a generalized cooling session in the housing market. So we're seeing consumers that are shying away a little bit from the market, are not necessarily getting into the market. Some first-time home buyers are still not able to qualify. So despite this cooling, and when I'm talking about this is really at the national scale. Prices are still relatively high, and so affordability is still an issue for a lot of consumers.
So I know you guys have just recently put out your outlook for 2026 in terms of kind of where the housing market goes. What's the most likely scenario in your view?
Well, in terms of new housing supply, we're starting to see that, new construction has been slowing down a little bit. So it's not necessarily good news in terms of improvement for affordability down the road. In markets like Toronto or Vancouver, we're definitely seeing some developers that are scaling back when we're looking at condo projects, for example. And so there is that risk that, there's supply shortages that will be appearing down the road in the shorter term.
So good to have you, Tanya. Appreciate your time.
Thank you so much.
Tanya Barraza Ochoa is Deputy Chief Economist at CMHC. Coming up, Canada is doing a necessary rethink of the auto sector here. We'll take a look after this. Welcome back. A new federal auto strategy aims to revitalize the industry in Canada. Here's a look by the numbers. The core of the strategy is around electric vehicles. The goal is 75% EVs as a percentage of total sales by 2035 and 90% by 2040. To encourage that switch, the feds will introduce tougher emission targets for vehicles produced between 2027 and 2032, making it agnostic as to how that's done. But there will be help for EVs all the same with a new incentive program for vehicles valued up to $50,000, with incentives higher for electric cars than hybrids, and they will allocate $1.5 billion to build out charging infrastructure. Trade also plays a role with a new emphasis on rewarding manufacturers who produce vehicles in Canada. And there's money for the sector to adapt, $3 billion from the Strategic Response Fund and $100 million from the Regional Tariff Response Initiative. That investment by the government is a reflection of the number and quality of jobs in the sector, 130,000 direct jobs, another 500,000 tied to it. But whatever happens in the future, are those jobs safe? Brian Kingston is president and CEO of the Canadian Vehicle Manufacturers Association. Brian, thanks for being with us.
Thanks for having me on.
Obviously, it's a hugely important sector. I do want to start quite high level with what you thought of the federal strategy. Does it give you confidence?
Overall, we welcome the strategy. First and foremost, the federal government got rid of the redundant EV sales mandate. We've been asking for this for the better part of 4 years. It was duplicative to existing emissions regulations, and the mandate was putting significant cost on manufacturers at a time where the industry is under great pressure from U.S. tariffs. So that was very welcome. But I also like that they paired it with demand-side measures to boost EV adoption. We do not have an EV supply problem in this country. There's 115 models available. We have a demand problem. So the strategy introduced a new incentive as well as some funds for charging infrastructure. So all in all, a good strategy. Of course, the success of this will depend on whether or not we can restore our access to the U.S. market, which ultimately underpins Canada's auto industry.
And big question mark there, Brian. We have the feeling that there's kind of a plan B, right, and that underpins that new federal strategy, that we need to come up with something else. Could that be a closer, deeper relationship with either European or Asian auto manufacturers?
There is no plan B for the automotive industry. The idea that you would build vehicles in Canada and export them to the world, it doesn't make commercial sense and it doesn't make economic sense. This industry, since the 60s in the Auto Pact, has thrived because of our access to the US market. We happen to sit beside the largest, wealthiest economy in the world. We are never going to change that. So if we cannot find some sort of accommodation with the Americans, our automotive industry will simply not be the size it is today. There is no commercial rationale to put a plant here and send vehicles to Europe or to Asia.
You know, the auto show's on, and we're seeing some of the latest models. To your point about the demand side of EV, a lot of manufacturers have backed off their EV plans because the customer wasn't there. Are you seeing evidence that they will be pushing back in that direction?
Yeah, absolutely. I mean, manufacturers are still committed to electrification. And if you look at the auto show and just see all of the product that's being introduced, there's huge volumes of EV models that are in market and coming to market. The challenge is this. I think we overestimated the pace with which this transition was going to take place. And what we're finding is we've gone through that early adopter consumer. They've all been serviced. They've got their EVs. We're now moving into mass market adoption. And that consumer is very different. They're looking for an affordable vehicle, and they're looking for something that can do all of their driving needs, meet all of their driving needs. So they need mass charging infrastructure. So we don't have those in place yet. And that's what it will take to get to higher levels. But the industry is still absolutely moving in this direction. It's just not going to happen by 2035.
And of course, to your point about the integration with that U.S. market, there not being a plan B, what does happen to the jobs in this sector if we do lose our access to that market? Is that even something you're willing to contemplate?
There is a deal to be had. We just have to get to the table and start negotiating this, and we'll come out of it. But there is no plan B. If that doesn't happen, the industry will not be as large. You will not see as many people employed in it. And I don't want to contemplate that. So
good to have you, Brian. Appreciate your time.
Thank you.
Brian Kingston is president and CEO of the Canadian Vehicle Manufacturers Association. Windsor, Ontario is considered the automotive capital of Canada with a long history and deep employment in the sector. Drew Dilkins is the mayor of Windsor, Ontario. He joins us now. Thanks for being with us, Mayor.
My pleasure.
So obviously, the new federal auto strategy is aimed at keeping and growing the sector. What's your expectation of what happens to the jobs in your community as you look down the road?
Well, I'm hoping we can see them grow. At the end of the day, this strategy is all about helping enhance the EV strategy. We see the move with China with respect to a couple of % of vehicle sales in Canada being opened up to the Chinese market. And the goal is let's bring jobs here. Let's continue to grow this industry. We have strong expertise, more than 100 years of experience in this area with automotive and tool, die, and mold. And we want to see it grow and continue.
Obviously, Mayor, a big question mark hangs over CUSMA. A huge part of that is around our auto relationship, which predates that trade agreement, obviously going all the way back to the 60s in the Auto Pact. How important is it to get that part of it right? What are you hoping for from those negotiators?
Well, I think it's essential. We've built, and we use the term, Amanda, unscramble the egg. It's very difficult to do that. And with respect to the auto industry, and the thought that the United States would simply repatriate every job that has moved to Canada or to Mexico as part of these complex supply chains is quite unrealistic. And so if they're not able to do that, which we don't think they could do, and certainly not in any short order, that means they have to get the parts from somewhere. And if they're putting tariffs on parts that come from Canada and Mexico, that just means American consumers are going to pay more for vehicles. There's already an affordability challenge. Why would the president want to layer on more cost to residents who are already struggling?
Just in terms of the community there, this has been a tough time. Plants opening, plants closing, announcements made, lots of excitement about batteries, and then, of course, a bunch of pullbacks. What's the feeling by people who are employed or who may want to be employed in future for young people in the area?
Yeah, well, listen, our largest employer is Stellantis. They make the Chrysler Pacifica here and the Charger as well. And they just finished hiring to add the third shift back. So about 1,500 people were hired to bring the third shift back because vehicle sales are very, very strong. They decoupled from the LG Energy Solutions Nexstar battery plant, but that's okay. LG has battery expertise globally, and they've committed to making this multi-billion-dollar investment work. They may not make EV batteries in the short term, but they're making other batteries for storage systems. And so on all fronts, things are still moving forward here, but there is that air of uncertainty that exists, probably not just in Windsor, but across our province and throughout our country, as we wait to see what happens this year with the renegotiation of USMCA and CUSMA.
Windsor, of course, very much in the news this week because of the Gordie Howe Bridge and claims that the U.S. has been treated unfairly. It feels as though that's going to die down here, Mayor, but are you concerned at all about the future of that?
I'm not, and I wish someone had sent Donald Trump and Carolyn Levitt a video and told them and showed them that the bridge is fully constructed. It's fully constructed and it's fully connected to the highway systems in Canada and the interstate systems in Michigan, in the United States. And so when you hear comments about the president wanting to see more U.S. building materials in the bridge project, are they talking about tearing the bridge down and starting over? Because that's exactly what would be required at this point in time. Clearly, the owner of the Ambassador Bridge, based on the New York Times article, had some influence with Secretary Lutnick, who then called Donald Trump. You see the post that's happened, and I get it. The owner of the Ambassador Bridge it's privately owned. He wants to protect his interest, and certainly a government bridge coming online that will take 70 or 80% of his business away overnight is cause for alarm. So, you know, the billionaires are working together, doing what they're doing. But at the end of the day, this bridge has been built. It's been talked about for 25 years. Successive presidents, prime ministers, mayors, premiers, governors have all played a hand in moving it forward. It's built. It's ready to open, and I can't wait to see it open later this year.
And I guess I should ask, it's pretty important for the local economy, I'm guessing, too.
It'll be the most state-of-the-art, technologically efficient bridge. And for a community like ours, the auto capital of Canada, just on the other side of the border is the Motor City. This entire auto industry works on a just-in-time delivery basis. So to remove the friction at the border and allow trucks to get across and people to cross very seamlessly is really essential for the economies and the livelihoods of people in my community, but also those who live in Michigan, Ohio, Indiana, Kentucky. And I can't wait for it to open. It's a beautiful bridge, and I think it's going to be very well utilized by a lot of folks shipping goods across the border and local residents traveling as well.
So good to have you, Mayor. Appreciate your time today.
Thank you.
Drew Dilkins is the mayor of Windsor, Ontario. Coming up, the confidence not just to start a business, but hire an employee can make a huge economic difference. That's still ahead. But first, Danish drug maker Novo Nordisk was on the offensive this week, taking on U.S. telehealth firm Hims & Hers. At issue, a compounded version of Novo's weight loss drug, Wegovy. Hims & Hers launched a pill version of semaglutide on Friday. By Sunday, it had already agreed to stop selling it after the Danes launched a legal broadside that included warnings that compounded drugs in general could be unsafe. One thing was clear, the legal tussle had a slimming effect on the shares of both firms. We're back after this. Welcome back. There are some green shoots when it comes to self-employment in Canada, and turning those one-person operations into ones with employees represents a huge growth potential. Pierre Cleroux is chief economist of BDC. Thanks for being with us, Pierre.
Good afternoon.
You have done some research on this, and I want to start actually with the fact that self-employment seems to be coming back. That's really important because it was, I guess, maybe a loss of confidence, or maybe just there was additional income to be found in the pandemic. But we did see it drop off for a while. It's good news that it's back.
Yes, and it really increased in 2024. We have about 70,000 more self-employed people in Canada.
And the report that you were doing was looking at that difference of when you're self-employed to when you take on an employee. What's the importance of that?
Well, it's important because when you become a business, you have to restructure your economic activities, and it does have an impact on the economy. So by the fact that 38% of self-employed are saying that they would like to grow their business to become a bigger business, well, that could have an impact on the Canadian economy.
What are the key factors? If somebody's self-employed and they think they could expand and therefore might need people, what are the elements that they need in place to do that?
Well, first of all, they need to make sure that they have enough revenue to be able to hire somebody. For example, that's often the first step. When you grow your business, you will hire somebody. You also have, in many cases, you need some financing to be able to grow your business. So to have access to financing is an important factor. And I believe also that people need support in terms of coaching. You know, there's a big step between being a self-employed by yourself and starting to hire employees and becoming a real business.
This is obviously, Pierre, the reason you do this research. It's work BDC does. Are the self-employed a category that you can help, and do they know that? Do people come to BDC for help that is available?
Well, hopefully so. We started a new program about a year ago called Community Banking, and the goal of the program is to help self-employed and very small businesses to grow their business. So we have two things that we do. We provide with our partners. We have about 40 partners across the country, and we provide financing, but also some support in terms of how to structure your business, how to grow your business.
And in terms of like encouraging people to take you up on that, it's an interesting time because we're seeing potential job losses because of new technologies. Is that actually a period of kind of opportunity for people who are looking to hire people for their small business?
Definitely. And, with technology, there's a lot of opportunities. There's a lot of small businesses who are using technology to grow faster. We see also a lot of business transition because we have an aging entrepreneur population in Canada. So there's also opportunity to make acquisition to scale up.
All right. We need to leave it there, Pierre. Great to have you with us for this. Appreciate it.
Thank you.
Pierre Cleroux is Chief Economist of BDC. Time for the takeaway and putting social media on trial. A landmark case opened this week against the world's biggest social media companies. Instagram's parent Meta and YouTube's parent Google will have to answer for their technology. The case will center around what the tech firms knew or intended about the addictive nature of their products. It's hard to argue that children and their parents, for that matter, don't become addicted to these platforms. But whether the plaintiffs can successfully argue that platforms are intentionally designed that way is another story. Just a couple of weeks ago, TikTok settled this case. That means it won't face public scrutiny of the algorithms at the heart of its business. That scrutiny is the most important thing about this trial because much of that technology is covered by a shroud of secrecy. Forcing the social media firms to throw open the curtain and reveal the wizardry behind could go a long way to helping parents and regulators alike. Parents, because any that aren't already convinced, might come to see that these platforms have fine-tuned methods for attracting and keeping attention from users, as well as subversive ways of directing that attention to new places. That will shape how many parents treat the technology. Regulators, meanwhile, have been behind this 8 ball for a while. In the spirit of letting innovation soar and regulating after the fact, these platforms have had very little by way of guardrails. But the harm being done in mental health and addictive behavior and in literal physical harm from suicide and other drastic behaviors is more and more evident by the day. The only real question is whether these firms knew what they were doing and at what level of detail they understood it. Is there a smoking gun of executives knowingly trading our children's mental health for clicks and ad revenue? This kind of trial is often the only way to get at that kind of confidential information. My takeaway, it might feel late to try to curb the excesses of big tech when it comes to manipulating us, but this is one case where it's definitely better late than never. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.